We are very pleased to have Core Mining and CEO Scott Treblecock presenting today to our constituency. Core Mining owns 100% of four projects that are both located in California, as well as British Columbia, and recently finalized a PEA on their Imperial Valley project in California. And presenting again today will be CEO Scott Treblecock, who is the former Chief Development Officer of Nevson Resources. Many of you probably are familiar with Nevson, and Scott was an integral part of their M&A activity, concluding with the acquisition or takeover by Zijin Mining in 2018. So without further ado, I'm going to hand it over to the great Scott Treblecock.
Thank you, Matt.
Take it away.
Great. I like that. That's a great way to start. Well, thanks for the intro. To those of you listening today, thank you for taking your time. I know it's a busy market and it's a great time in the gold business. So thank you for taking time to hear a little bit more about the Core Mining story. So Core is a North American gold equity. We are both a developer and an explorer. We're pursuing both paths to value creation in parallel, which is a little bit unique because we are working, as Matt said, a portfolio of projects as opposed to just one specific project at this time. The projects are located in safe and stable jurisdictions. We're in BC and California. We are well funded by 3 stages of investment from Mr. Eric Sprott, who currently owns 26% of the company. We are, however, also a very young company. We've only been public for about 19 months, and management and the insiders, including myself, still own about 38% of the equity of the company. So it's a very tight cap structure, still a very young company. We, on the back of Eric Sprott's investments, have been out actually conducting work on the ground in their assets, bringing those assets to the light of the market, as well as de-risking and adding value to them. So we'll go through various elements of that story in our time together today. I will be making forward-looking statements. I encourage anybody that takes an interest in Core Equity to ensure they go to our website, go to CDAR, look at our public disclosures, read our documents. There's a lot of good information about the risks and such of investing in a company like Core. I won't spend a lot of time on gold. I'm not if I could predict the metal price, I certainly wouldn't be in the CEO of a gold equity company. I would be trading gold. But, I left Nevson Resources after the takeover by Zijin in late 2018. The company at that point was a base metals company. And when I thought about what I wanted to do with my career and where I wanted to put a large amount of my capital, I thought that the timing was right for precious metals. I thought that because, we're on the tail end of some fairly large and long macroeconomic cycle here. We've seen a long run in the S&P and the equities. We've seen a lot of various types of volatility come into the market. I certainly didn't anticipate COVID being one of those sources of volatility. But if you look in the back of this slide, this is actually a picture that I pinched from The Economist right around when I was making my decision to join Core. And they were talking about precious metals benefiting from the increased volatility that there was seen in the world. We've since seen, obviously some significant good support for the gold price. Quite a conservative organization like Bank of America is calling for $3,000 US gold in the next 18 months. That's a fairly bold call. That was made when gold was $1,800, and we've seen it break 2,000 for the first time. And then a couple of weeks back, we saw Warren Buffett kind of reverse a long standing of not liking gold as an equity class, take a large stake in Barrick Gold, while at the same time selling US banks. And I think that just speaks very strongly to the economic proposition that there's certainly, believe or not, gold is money or any of the gold bugs terminology. Certainly gold is an emerging asset class. It is attracting capital. We're seeing it in the Canadian capital markets. We're seeing inflows to some of the funds. We're seeing prices appreciate in the equities, and we're seeing access to capital for the first time in a long time where juniors like Core are able to access capital and put it to work in the ground, making discoveries and generating shareholder value. I hit on most of the points of why I think Core is a good investment. We do have advanced assets, so 3 of our 4 assets have ounces in the ground. They have already drilled resources of significance. We have a total of 4.9 million ounces in the ground today inside the company. One of those assets has a preliminary economic assessment showing a potential value of $343 million US dollar NPV at $1,450 gold. That rises to almost $1 billion if you convert it to Canadian dollars, compared to our 150 million market cap at spot. So I think there's a lot of value to be created by de-risking and advancing that Imperial project. But in addition to that, we're currently completing a second PEA on another project called Long Valley, and that's due sometime in September, and that should add yet another good chunk of NPV to the project, which should allow analysts to push up their valuations of Core. We also, as funded by Eric Sprott, have the balance sheet to pursue work on the ground in our assets. We're currently drilling in British Columbia. We're permitting drilling on 2 other projects, and we're advancing permitting to move the Imperial project towards becoming a mine. That's the development side. All of that's going on in parallel, and we think that will create a lot of value catalysts or news flow for the company in the coming months and quarters. The capital structure also remains tight. We've not done any distributed financings on the company. We don't have 4-month hold paper sitting in a bunch of people waiting to sell it when the hold comes off. We've not widely issued warrants that create selling of the underlying equity. So I think we've got a really tight, well-managed cap structure, and that hopefully will be a benefit to Core shareholders going forward. The company, if you look at fundamental valuation, is discounted to our North American peers. If you look at both a price to NAV and a price to ounces in the ground basis, Core looks very cheap compared to the assets that we have. So I think all of this are very good reasons why Core has great potential in this gold price environment. This is a quick snapshot of the ounces in the ground, totaling 4.9 million ounces. I'll go back and talk more specifically about the projects in a little bit. We've got exploration opportunities across that portfolio. We've got large projects with large strikes, so that's the trend length. We've got large claim blocks around those projects, and we own 100% of every one of these projects with relatively low royalties. So I think we've got a very clean set of assets that we can move around, make transactions that don't have a lot of overhangs that would prevent us realizing value from these assets. Again, we've got that PEA, which I'll drive into the asset a little bit specifically in a little bit, but the PEA was based on a 2.2 million ounce oxide gold resource in Imperial County, California. A mine plan on that asset shows a potential value of about $343 million at $1,450 gold. That rises to about $500 million at $1,700 gold, and up there to the spot. That shows a deep discount to Core shares on just that asset, but it also includes no value for the exploration potential, both on strike and in the regional exploration package we have around this project. Project also ranks very well compared to other peer projects, and I'll show you a few slides in a sec that show that. As I also mentioned, we're pursuing a second preliminary economic assessment in the company right now, and this is just a quick chart comparing those 2 projects. The Imperial project, you can see a side-by-side comparison of the resources, very similar grades. They're both shallow deposits. They both have infrastructure. They both have good metallurgy. So we'd expect a good outcome from the PEA at Long Valley. That news is expected to come out in September, and we've timed that specifically to feed into what is traditionally a good time for the gold equities. Stepping back from it all and talking about news flow, you can see we've got a lot planned and going on right now inside the company. You'll understand this chart a little better after I go through the individual assets, but this is just meant to show that the capital we have in the bank right now is funding work across the portfolio. Permitting at Imperial in the top line. We're also doing regional drill targeting and permitting regional drill targets to go try and make some new discoveries in that project. At Long Valley, we're doing the PEA, following that with a drill program late this year, early next year. up in BC. We're currently drilling at our FG Gold project. We've got, I think, 4 holes in the lab and 10 holes complete in that drill program. And we'll have 7,500 meters of drilling to release to the market over the back half of 2020. So that should generate some nice news flow. And then we've also got another project in BC where we're going to move the drill later in the year. So lots of anticipated activity and in market noise coming out of core over the next couple quarters.
Hey, Scott, we have a real quick question here
Yep.
from one of the attendees. So the question is, do they know what, and this is, I believe, with regards to Imperial, in terms of the economics and what they look like at the current gold prices. And also, it is a guess, but what percentage of the market cap does management guess the market value, or is it valuing Imperial within the entire market cap?
Yeah, good question. I think I've got a slide on the valuation question coming up in a couple slides here.
Okay.
As far as the the value of the project at $2,000 gold, if you ran that through the NPV model, we did report that in the sensitivities, although that was the highest sensitivity we presented, even though we only did the PEA about 4 months ago, was $720 million US, or just about $1 billion Canadian, compared to Core's current 150 million Canadian market cap.
Wow. Okay. Great. Thank you.
I already talked about the cap structure of the company. You can see on the slide here, and the strong insider ownership, which I hope gives comfort to an investor that management is being very tight with the capital. We're spending our money alongside investor money in order to advance our assets, and we're side by side and trying to generate per share value along with our shareholders. We're starting to get some traction in the Toronto street. We've got formal coverage out from Cormark and PI Financial, and we're on watch lists at Echelon, Laurentian, and Paradigm. So I think the street's finally starting to wake up a little bit to the great value proposition in core mining. To that question that was just posed through the chat, Core, here's some metrics around Core's valuation compared to peers. Core is currently trading at a 0.26 times the 1450 net present value of that project to our market cap. That compares to a peer average of 0.86 times. So while Core has seen some reasonable price appreciation this year, we've done really well in the equity. I think we've got a long way to go before we get peer levels of valuation for our assets. So if you look at Midas, Corvus, Integra, Gold Standard, Liberty, these are all Canadian listed companies that have US gold development projects. We don't see why we cannot achieve similar valuations to these companies with our portfolio. And you can see they are all 220 to 510 million market cap companies. So, we've got, we believe we've got a great portfolio, we've got great projects, and we want to see them appreciate in value, far above where they are today.
Quick question for you here again from the audience, from Robert. What kind of base cash do you feel like you need to hold? Trying to understand how far does the 10 million cash gets you with the planned CapEx?
Yeah, that's a good question. So, we went through the budget. That full activity list that you see on this chart is funded through 2020, including the over 5,000 meters of drilling at the FG Gold project, some drilling at Gold Creek, the permitting of Imperial, about $1 million allocated to drilling at Imperial when we get drill permits there. And at the end of the year, we still expect to have somewhere between $4 and $5 million in the bank that'll fund us, well into 2021. As all juniors do, subject to the right share price and the right market conditions. We as we get drill permits, could certainly expand to do a lot more drilling on our projects and be more aggressive. So we will look at, again, subject to us being large shareholders and not wanting to dilute shareholders unnecessarily, we will raise capital only at the right price and only as we need it. Okay, so let me just dive into the assets a little bit here. I'm sort of about halfway through my personal allocated 30 minutes of talking, but again, everyone out there, please feel free to dive in and ask questions. A picture kind of says 1,000 words about the nature of something. And if you look at the picture in the background of this cover slide, this actually tells you a lot of what you need to know about the Imperial project. This is about the location where we're proposing to build the heap leach pad for the Imperial project. You can see the type of topography we're dealing with. This is flat. This is northern Sonoran Desert. This is Imperial County, California, where in the summer it averages almost 40 degrees C. There's very little vegetation, and it's a very favorable place to build a gold mine because there is an operating gold mine about 9 miles to the northwest from this location called Mesquite that has been operating there for 25 years. The other positive is that, under your feet in this location, there is a large groundwater aquifer, and there is a water well already drilled on site. So despite this dry, remote location, which is what you want for mining, we also have access to water, which can be a significant issue, but it's not expected to be for the Imperial project. The project's PEA shows a potential production of about 146,000 ounces of gold per year for just over 8.5 years. That puts the project kind of side by side with that same peer group that I showed you the valuation for. It's similar or more production than Liberty, Goldstrike, and Integra. A little smaller project than Corvus or Midas, but certainly something that's going to stand tall as mid-tier gold miners look for growth in this market, because they're the first ones that are going to, get the valuations. We've already seen, the Barricks, the Agnicos, the Yamanas, the B2s appreciate in price significantly. And as they start to tap out their value appreciation on the metal price, they're going to need growth to attract investors, and they're going to have to go start kicking off M&A and hopefully taking over some of these great development projects. Little more pictures say 1,000 words about Imperial. So here's the water well on site. We also have a network of monitoring wells that are already put in on site. Aquifer's in good shape. It hasn't gone down since this project was drilled in the 90s, despite Mesquite using the same aquifer for 25 years. So just demonstrates that there's a good supply of water there. If you look on the right side of this picture, you can see the power line, which literally runs over the southern end of the property, which has the capacity and good sufficient power to run our project, which in the end, this is a heap leach project. And in fact, it's even a run-of-mine heap leach project. So we don't even have a crushing circuit. We don't have a mill. So we've got very low power requirements anyways, but needless to say, we've got access to power. We've got paved roads that run within 5 miles of the site and very flat topography. And in fact, a lot of Mesquite's workforce drives right by the front door of this project every day on the way to work. And as that mine heads towards the end of its life in the next several years, that labor force is going to be looking for a new place to work. And we think we've got a great opportunity to tap into that support in order to move our project through pruning and to provide jobs to those skilled workers. So I think it's got all the attributes you need for a nice, low risk, low cost gold mine. The mine is situated in Imperial County, California. Imperial is an experienced mining jurisdiction. As I said, they've hosted the Mesquite mine for almost 25 years. In the 1990s, there was the American Girl and the Tumco and the Picacho mines, all open pit heap leach gold mines. And in fact, the gold mining history of Imperial County goes right back to before the California Gold Rush, when Union Pacific Railway workers discovered gold in the desert washes as they were installing the railway, which goes up just through Brawley and to the other side of the Salton Sea on the map. So long history of gold mining, and I think that will give us great local support for responsible job creation in the county. The county also has a high unemployment rate and is facing loss of some skilled jobs at Mesquite in the coming years. So we believe we're going to get great political support. And we've been out for the last 12 months now since we ramped up the project, talking with local stakeholders, engaging with everybody from the federal representatives for this region right down to the local chambers of commerce and local business organizations, county board of supervisors. And we've seen great support expressed for the project. So I think this is the kind of place in California where you can permit a mine. And like everything, it's location, location, location.
So yeah, real quick, Scott, and a question from Matt out of our audience with regards to what you're just touching on. Has there been any pushback from NGOs, either currently or in the past, on this?
Oh, certainly in the past. So, this project was taken into the permitting process by a great company called Glamis Gold in the 1990s.
Sure.
Glamis drilled out the project. They were operating the Picacho mine, which is the other end of our trend. I'll show you the claim blocks in a sec. And they were looking to bring the project into production because their Picacho mine was running out of ore. And unfortunately, they ran into a very strong environmental movement during the Clinton administration. If you recall, that was the era of the Clintons. They had raised a lot of money from the environmental NGOs, particularly the Sierra Club and others in California. And there was a federal level political agenda to protect deserts in California. And unfortunately, this project at that time became a poster child and faced a lot of opposition. A bulk of that opposition was related to viewscape. And the net result of all of that was that California passed in 2002 what is called the backfill law. And the backfill law means that newly permitted open pit mines in California, as part of their reclamation obligations, need to backfill the open pit so that there's no visual evidence that the mine was ever there once it's reclaimed. And that's a very high standard and expensive standard to live to. And if you also recall, in 2002, gold had collapsed to $300 an ounce. And every gold company walked from California and created a very bad reputation in the gold sector for being able to do business in California. And that's exactly why Core has this opportunity today, because Glamis put the project on the shelf at that point, eventually went on to become Goldcorp. And, the people behind that project always thought it was something that they coveted because they held on to it right through till Core buying it in 2017. So I think the project does have a history, certainly, of opposition, but I think with full compliance with the backfill law, which Core's mine plan, to be clear, is fully compliant with that new backfill law, it should be the opposite. This project should be held up as the standard that projects should be built in California. And, we believe that takes away the political wedge issue that was used previously and sort of clears the way for the local will to get the project built to, overwhelm, any opposition from NGOs, which ultimately there's always some level of opposition for every development, like wind farms, solar farms, parking lots. It doesn't matter. Everything permitted in the deserts in California has some form of opponent, but you need local support to get over that, and you need to keep it from being political. And I think with all of the desert protection measures in place today, we're in a good position today with that compliance of backfilling to get this project in and through the permitting process. I saw a few other little zips come in. Was there some follow-ups to that in the?
So a couple more follow-up questions on that. Is the Imperial project, is that entirely on BLM land? That comes from Mark in our audience.
Correct. This project is 100% on federal land, administered by the Bureau of Land Management. We've been engaged with them for the last 8 months. We're currently doing a plan of operations with them in order to go out and drill. We're permitting a large drill program currently on the project. And the BLM has, robust processes, same process that they use in Nevada or Oregon or anywhere where there's federal land. So they are our primary regulator. California law is applied to federal land through the county. So ultimately, the county board of supervisors will sign off on the reclamation plan for this site, which, as I said, in full compliance with backfilling, should make it a non-politicized issue that they can sign off on.
And then another question from Rob in our audience: what kind of sensitivity do energy prices have on this project? Obviously, California is not, quote unquote, killing it in terms of cost and reliability. So can you extrapolate a little bit on that?
Yeah, so electrical inputs are incredibly low on this project because it's really running air conditioners and lights in the office. There is no milling circuit or crushing. You have to run pumps to circulate leachate solution, and that's probably your biggest draw of power. So power costs are very, very low. I think they're less than 3% of the costs that go into the life of the project. Where energy costs do come into play is that you obviously have to use diesel fuel for your trucks. There'll certainly be some consideration for some element of electrification if those types of trucks are available when we go to buy equipment. But right now, it would most likely be diesel gear. And that heavy mining equipment will obviously, that part of the operating costs will be subject to, diesel price in the US, but that's more of a commodity, and it's not heavily taxed even in California. So, the sensitivities are just going to be around the diesel price.
Got it. Great. Thank you.
Okay, great. So we're just finishing up on my few points on California. California, as those know, it's called the Golden State for a reason. It does have a long history of mining. In the last 5 years, there have been 3 gold mines permitted in California: Soledad Mountain in Kern County, Castle Mountain in San Bernardino County, and Sutter Gold in, I'm forgetting the county in that one, up near Grass Valley. So location dependent, you can mine, and 2 of those are open pit mines in California, but it is very local and it is very subject to your specific location. I think we have that location in core mining. So next steps for that project's actually moving into permitting later this year. As I said, we're currently engaged with the Bureau of Land Management and moving forward with developing our plan of operations, which be our key permitting document, which would then kick off an EIS process. We'd expect to see 2 years or so to get to However, I encourage, a shareholder does not have to wait 3 years in core to see the value from the project. You would typically see, if you look at other projects, the value to creep into the market cap over time. And most specifically, you'd expect to see in this good gold market, at some point, if we show that there's a glimmer that this project's going to get permitted, you'd likely see M&A move the project into a developer, which would be an exit for a core shareholder. But his exposure to the project, why I'm in core mining. What else we like about this project is we've got a very large claim block around the project. And if you look at this sort of angular map, the sort of mid-colored brown, angular shapes are our claim blocks that head from our project, which are the red blobs down in the south marked Imperial deposit, all the way up almost 9 miles to the Mesquite mine, which again is that mine that's been there for 25 years. It's currently owned by Ross Beatty's Equinox Gold Company. And we were able to go secure all the claims right up to nearly the edge of their heap leach pads. And we think there's great potential on this ground to make a new discovery. If you go the other way off this map to the south, or actually to the bottom, which is actually off to the east, you then also walk on core claims another 9 miles the other way to the old Picacho mine. Both directions from Imperial are under sediment cover and have never been significantly explored, because Mesquite, Imperial, and Picacho, the 3 deposits known on this 28-kilometer trend, all outcrop. So they were all discovered easily back in the day. No one ever used geophysics and more expensive blind drilling to look for deposits. So we want to go look under some of that cover. We did some geophysics earlier this year to do some targeting, and we think we've been able to identify the structure that connects Imperial to Mesquite, and you can trace that by the little red lines in this map, all the way up across some faults, all the way up to Mesquite. And we are currently permitting multiple tens of drill pads to go test some of these targets and try and make a new discovery here. And if we can do that, it's going to create a ton of blue sky excitement around the value that will already be created by moving in Imperial into the permitting process. So great exploration potential on Imperial. Okay, so that's one asset in core. Got a PEA, moving into permitting to create value, as well as trying to make new discoveries and grow that project with the drill bit later this year. So now moving up into Central California. This project is in Mono County, California, which is a little bit to the southwest of Reno, Nevada. It's about 9 miles across the border from Nevada. It's in the very, the same, rock groups as the Carlin Trend in Nevada. In fact, this deposit was drilled by Royal Gold in 92 to 96, and it was similarly abandoned with the backfill law by Royal when they became a royalty company in the early 2000s, and Core was able to buy it in 2017. Project comes with 1.7 million ounces of shallow gold, most of it oxide, about 1 million ounces of that is oxide. The deposit literally is right at surface. It could potentially be mined with a very low strip ratio. Core has gone out and relogged all of the old chips from the old drilling. They didn't use core drilling, they used RC drilling, so you end up with little chips. We've done field work, we've reestablished a modern database, we've done geophysic lines across the whole project. We believe there's a significant upside to the currently drilled resource, and we want to go out, and right now we're permitting with the U.S. Forest Service, who manages this federal land, in order to go drill some of these targets, extending up the Hilton Creek Fault to the north, extending the southeast zone up to the north, and we believe there's another parallel zone off to the east that can all add additional oxide ounces and increase the size of this deposit. In the meantime, while we're permitting that drilling, we're completing a preliminary economic assessment of the known mineralization, and we expect that to be delivered in September of this year, really in a few weeks here, hopefully hitting some of the gold conferences to create some buzz around Core. And the fact that Core has a second really nice looking development project inside it. There's a second opportunity at Long Valley. Underneath the oxides, there's undrilled sulfide potential. This type of epithermal deposit, has the potential to have very high grades at depth. And we want to at least have an opportunity to test some of those targets to see if there's any underground potential of this deposit in addition to that at surface oxide. So both extending oxides and hitting some feeder targets are both in the drill planning that we currently have in permitting with the Forest Service. Moving now off of California up to the final package of assets that are up in the Caribou region of British Columbia. The Caribou is located around Williams Lake in sort of central British Columbia. It's road accessible, it's on infrastructure. There's multiple operating mines in the region. The Gibraltar mine, which is a open pit copper mine owned by Taseko. The now infamous Mount Poly mine is also right near in the Porphyry district, just to the south of the Gold District. And there's a long history of gold mining. In fact, most of Vancouver and British Columbia infrastructure was built to support the 1800s Caribou Gold Rush, as it was called. And all that gold came from the Barkerville and northern part of the Caribou Gold District. Core has gone in and staked or acquired 1,000 square kilometers in the Caribou. We control pretty much the whole southern half of the Caribou, outside of another company called Spanish Mountain, which has a large low-grade deposit kind of packed in between our Gold Creek claims and the southern claims. We also have a 1 million ounce resource that we're currently drilling to increase the grade and expand in scale to the southern end of the belt. And if we're successful showing that project has merit, it opens up this entire 1,000-kilometer package to modern exploration, which hasn't been done in the Caribou, on a lot of this part of the Caribou in many years. So zooming in a little bit on that 1 million ounce deposit, that 1 million ounces is contained in that little red stick you see on the right side of this map. That's about a 3-kilometer strike of a sedimentary rock package that comes to the surface. That same rock patch extends in the U shape you see on that map for an additional total of 20 kilometers, so another 17 kilometers of strike. Core is currently drilling in the existing resource to redefine some of the structures and reinterpret that resource. We're looking to upgrade it to over 1 gram per ton so that it looks more attractive as an open pit gold target. We're also looking to make new discoveries underneath the current mineralization, because it's only ever been drilled to 100 meters. It was drilled in a time when only shallow drilling was warranted in the project. So we've got lots of opportunities at depth. And all told, we hope to make this into the next great BC gold development story. Currently have 5,000 meter drill program currently budgeted, although we could extend that depending on the snow for a few thousand more meters, depending on success. We're also going to do a couple step outs. So we're going to step out both up that trend to the northwest and to the southeast, and try and step out about 500 meters and show that mineralization continues. So we can show not only can we increase the grade of this project, we can significantly increase the ounces over time as well. So I think some
Possible,
exciting exploration going on, and drill results expected in September, October, November this year.
possible resource upgrade here, Scott?
Not in the near term. It is a coarse ore body that's been well drilled in the past. It has, a couple hundred holes already in the deposit. And in order to upgrade the resource and actually declare a new resource statement, we'd have to do a much larger program.
Okay.
So right now we're trying to do enough work to show scientifically that that's possible and show there's some upside. We'd have to go back and do a larger drill program next year to actually upgrade that resource. So something that we could actually calculate and disclose.
Sounds good.
Yeah. So right now we're looking to make new discoveries at depth on strike and drill some of these high grade structures. We're using a quite an expensive method of drilling. We're using a type of drilling that allows us to get good core recovery. It's a wide diameter core, so we're getting big samples. And we're also pursuing something that's called metallic screening, which is sort of the best, way to assay rock for coarse gold. Because in this deposit, we actually have visible gold, and that gold is not dissolved well and measured by fire assay. So, what we've seen so far is a 10 to 48% upgrade in grade by doing metallic screens over traditional fire assay methods. And the only reason fire assays weren't done in the past is because it's more expensive. And, operators who didn't know the deposit very well yet were trying to do everything on the cheap, and gives us an opportunity to come in and using a bit of science and a bit of money to come and hopefully upgrade this resource to something attractive for open pit mining.
So we had another question from one of our attendees. Can you speak to management's POV on a strategic and what sort of relationships experience you have?
I think POV being point of view. So just a couple points on that. So Core's portfolio has attracted some interest from mid-tier gold miners. And, as they approach us, we are willing to and do sign CAs. We've signed several CAs in the last few months. Those companies can come look at our assets, and ultimately we are practical for the right price. Our assets could be monetized into a developer and give our shareholders good exposure to a different company's equity, but certainly only at the right price. And we certainly haven't seen any offers yet, but right now our objective is to make sure that we do the right work on the ground, that anybody coming in that does due diligence, particularly on Imperial, says, wow, these guys have done a good job. This is how you should build this mine. And we'd be willing to pick up this ball and take it across the finish line. That's how you get a good price in M&A. And, I was on the buy side at Nevsun for almost 8 years, buying projects, kicking a lot of tires. We ultimately bought Reservoir Minerals. And then similarly, I was on the sell side when we sold Nevsun to Zijin. So I think we've got inside the company, between myself and the other directors on the board, we've got good M&A experience that can make sure we maximize value to shareholders.
Sounds good. Very good.
Well, I'm gonna wrap up on coming back to this catalyst-rich chart that I put up earlier. Now that I've kind of gone through the portfolio, let me go back and just revisit this quickly, and then I'll turn it over to questions. So Core has raised capital from Eric Sprott. Only to date, we've done that in a very young company, and that's created a very tight cap structure. We're using that capital that we raised to go out and do work across our portfolio. Starting at the top, that means moving the Imperial PEA into permitting, and we plan to do that at the back half of 2020 by submitting our plan of operations to the BLM. In parallel to that, we're doing soils and geophysics to hone our targets, and currently permitting drilling to go drill some of our upside targets on that project. We'd expect to be drilling in the back half of Q4. And that's good because that's when the heat comes off in Imperial County anyways, good time to drill. It also coincides when we would be wrapping up drilling at our FG Gold project, where we're currently drilling to upgrade a resource and make new discoveries at that project. And then finally at Long Valley, we're completing a PEA and permitting drillings to go hopefully follow up that PEA with some new discoveries to grow that resource and grow the value in that project. So working the portfolio hard, trying to generate lots of information for the market, lots of news flow that hopefully will benefit shareholders and hopefully attract a lot of attention to Core. I'll stop there and turn it over to questions, Matt.
Real quick, Scott, quick question from me, just on the permitting aspect with regards to Imperial vis-a-vis Long Valley in mono. Is there a difference there, a delineation between the counties on that aspect?
Yeah, Imperial is in Imperial County, California, and Long Valley is in Mono County, California.
Right. And
Certainly is a very big difference in that Imperial County, as I said, has a large operating gold mine. They've got a local BLM office in El Centro that, goes to Mesquite, conducts mine inspections, manages the issues at the mine. There's also a large open pit gypsum mine in Imperial County run by US Gypsum that is also, so the county understands, the bureaucracy knows how to manage mining, and the county has, ever since it was formed, when California was created, a history of gold mining. So I think that's a place where you can really wrap your mind around of getting strong local support for mining. If you look up in Mono County, while during the gold rush, there was lots of mining in Mono County, there currently is no metallic or gold mining going on in Mono County. So you're going to have to go through that extra step of education. And we want to do that by working through the exploration process. So that's why we're not going to take the PEA at Long Valley and immediately move it into permitting, which I think the PEA shows we could. We instead want to go explore, grow the project, educate local stakeholders, educate local government, and try and build support for the project ahead of moving into any kind of formal permitting process. So it is a less experienced jurisdiction, and it's going to be way easier in Imperial County.
Got it. So a couple more questions from the audience. This from Rob. Where would you place yourself on the quote unquote we build it versus quote unquote we sell it spectrum? And what expertise do you have in-house if you choose the former?
Yeah, good question. I think I actually took this chart out, but I might have left it at the back end here. Hold on, I have some secret slides here packed at the back. Okay, so I answer your question about capacity. So the key person I brought into the company to deliver Imperial was a gentleman who's our chief operating officer named Mark Leduc. So Mark is a 30-year plus both geologist, and then he did a master's in mine engineering. So he's both a geologist and a mine engineer. He has spent his entire career building and advancing heap leach gold projects around the world. He built several mines while he was at Barrick. He then went on to be the CEO of several juniors that both configured and went into construction for heap leach mines in Peru, Armenia, United States. So he's got a deep experience in working. However, his most recent assignment was to be the chief operating officer of Castle Mountain, which hosts a now permitted project in San Bernardino County called Castle Mountain, which is a growth project inside Equinox Gold. So in Mark, we have a guy who can not only get something done in the heap leach world, he can get it done in California, where he's worked before. He knows the system. He knows a lot of the people. He knows how to get things done. So he's the right guy to take the project in and through permitting. And if required, he can hire the right manager and the right people to actually put this project in production, because this isn't like a project that's got a tails dam and a mill, and it's very complicated. This is a run-of-mine heap leach. There are tens of them operating in Nevada. There's a huge skill set in the United States for people you can hire to run these things, and they're incredibly simple. They're basically a gravel pit with a heap leach pad. So I think this is a project we could take all the way through to production and generate gold if it came to it. That said, I don't expect personally that happens. I think this project's attractive enough that someone will approach us sometime in this gold cycle and offer us enough money that we're willing to sell it to them. So we are ultimately practical.
And with that being said, and another question from our audience, from Mark in our audience, whether it's you guys or an acquirer, if you can forecast, and I know you don't have, a magic ball in front of you, but if everything did go as planned, when would you forecast, whether it was with you guys or an acquirer, and it's very nebulous, but a first gold pour at Imperial. What would you deem as kind of realistic in forecasting?
48 months.
Wow.
So
Okay.
that would be 36 months of permitting and 12 months, and that's kind of fat. It probably really only would take 8 or 9 months, but you're always going to have a bit of slough as you move from permitting into financing. So we'd say 48 months to first gold pour.
Okay. Okay. Very good. Another question from the audience, from Lawrence in our audience. How did you initially connect with Eric Sprott?
Yeah, that's a great question. So one of our directors, sorry, I was just showing the sort of longer timeline there, Shart. Let me go back up to our directors. One of our directors is Brendan Cahill. He's the CEO of Exelon Resources, which is a growing silver producer. Eric Sprott was a large investor in that company, and Brendan had developed a relationship. So he made the first introduction, said, "Hey, Eric," this was back in August of last year. He had started making some investments, but it was still pretty early in his spending spree. We went in and we just went into his office on Brendan's recommendation, myself and James Hines, the founding shareholder and chairman, pitched him on it. He got really excited on the ounces in the ground, and he made his first investment on the spot.
That's great. That's great. I know Brendan as well. Worked with him in the past, and that's a great guy and a great story over there. So, and moving forward, is there any other projects in the portfolio versus a single asset company that the market can properly value core, and what would that be, if so?
It didn't quite. So, I mean, I think I got the question, but the value in core, I kind of build it up in pieces, right? The most tangible piece is the Imperial net present value.
Yeah.
Use whatever metal price you want, use whatever discount for permitting risk, whatever, you're going to find core looks cheap on that number. Then you add on top of that, a Long Valley net present value, which is farther out in a little earlier stage. So again, you can, do whatever math you want around that. Then you've got 1 million ounces in the ground in BC that arguably probably gets very little value in core fundamentally today. If you're an analyst, you'd probably give it very little. We would like to move that towards, again, another big chunk on that stacked bar chart, by doing good technical work up there. And like that work it's only budgeted to spend $1.6 million this year there. So that we can do work on these shallow assets really cheap, because our assets are road accessible and shallow. So we can do these kind of things across the portfolio without spending a ton of capital. And I think that's a great way to keep adding those chips of value. And then, when you look at valuing stories, you also then get exploration potential and sort of blue sky discovery potential, which we think we also have some strong characteristics. But you're not going to get all of that efficiently valued in a portfolio. So obviously core will be open to and consider the right transactions as we go down the path here to properly get as much value as we can for this portfolio of assets. And if that means putting the BC asset into some other company with some other assets, or again, someone comes along and buys Imperial and we keep the rest of the portfolio, and we'll see what happens, but we're ultimately practical about trying to generate value from the portfolio.
Got it. And that kind of dovetails into another follow-up question from our audience, from Mark, going back to Eric Sprott. What was, or what do you feel was Eric Sprott's main interest in core? Was it one of the projects or the entirety of the total asset base?
Yeah, I mean, I think very simply, it was the value per ounce in the ground. He was getting exposure when he initially bought the gold at, I don't know, $3. Like when he originally bought core, it was 30 cents, right? He got whatever it was, 6 Canadian cents an ounce of gold in the ground. He's like, wow, that's cheap. And up gold market, I can make 10 times my money on that. That's how he thinks at the time. And then on his second and third investments, where he was, investing at higher and higher valuations, his most recent one, at $1, he's saying, okay, these guys took my money, they deployed the capital, they efficiently used it, they actually got work in the ground. I like how they think about generating value, and I'm going to keep putting money where money where my mouth is, and he made 3 investments and owned 26% of the company.
Incredible, incredible. So let's see. We've got another question from Mark. What in situ numbers are you using when valuing?
In situ numbers. Can you explain that a bit more?
This is coming from the audience, so I'm a little bit perplexed myself. So maybe Mark can extrapolate on his question as we're going through the presentation. So cost per ounce of the gold in the ground.
Oh, okay. Yeah. Well, it's, I mean, there's no cost. The gold is there in the, as defined in the 43-101 in the resource statements. It's what we're talking about is really the value, how core is valued per ounce in the ground is one metric some people use.
Yeah, he extrapolated, so value per ounce of the gold in the ground.
Yeah. Yes, that's certainly how Eric thought about his initial investment. Yeah. And then I think as he grew to know the company more, he liked more and more, how he ran the business and how he deployed the capital, and that he wanted us to be aggressive with the drilling. You could see there could be an alternate strategy where Core would only focus on Imperial and really just pound the table on that. That would be an alternate strategy. That's not what we've chosen to do. We've chosen to be aggressive with exploration because we're in a market where we can attract attention with great drill results, and if we keep hitting the market, we can keep getting better and better valuations.
Fantastic. So I think we are running up against it here. If there's more questions for folks, I'm not seeing at this point. But I will say this was an excellent presentation. Great story. I'm an investor, and great working with Scott and David on this. And if you have more questions for Scott and or David Jan, who runs the investor relations program at Core, feel free. And as for me as well, at 49 North, we will obviously be going out and trying to get more feedback from all of the attendees today that we will provide to Scott and David. This is a mission critical portion of the process for them and for 49 North. And again, we're extremely pleased to have this group with us today. I think it's an excellent story. Obviously, I put my money where my mouth is on that one. And very glad to have you guys be a part of our program today.
Yeah, thanks everyone for taking the time from Core to spend some time on our story. It's a really exciting time to be in the precious metals sector, and with capital flowing, it's going to be some exciting times ahead. And thank you, 49 North, for having Core.
Yes, thank you, Scott, and thank you to all our attendees. Stay safe out there. Get away from these fires. Stay inside. And we'll go from there. But thanks again to everyone involved today on the platform, and look forward to it.